trovato l'invasor, oh partigiano, porta mi via. Oh vela ciao, vela ciao, vela ciao, 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 partigiano, portami via. E mi sento di morire. E se io muoio da partigiano, oh vela ciao, vela ciao, vela ciao, ciao, ciao. E se io muoio da partigiano, tu mi devi seppellire. E seppellire lassù in montagna. Oh vela ciao, vela ciao, vela ciao, ciao, ciao. E seppellire lassù in montagna sotto l'ombra di un bel fiore.
How fucking dare they take it away from me? The market makers are after me, you know.
Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility.
Hello, how's it going? And welcome back to mentfx. So today, what I want to do is I want to actually jump right into my Discord, so the actual community, the team, and as you all are aware, you guys can always join that up using the links in the description, but I'm not going to advertise that because I just want to sit here and help some of you guys out that are here for free, so you can learn a little bit more about your trading and about getting better in your own discipline so that you can go ahead and use that to go get funded, to trade your own accounts, and do whatever fits your style as an actual trader. So as I am here today in just the group, every day we are all interacting with each other. We're all helping each other. We're all sharing information, ideas, all the fun stuff. We had Sierra tell me to look at XPT USD. Been some beautiful moves on that. And that's because most of the metals have been undergoing some very nice accumulations and moving long, part of which, I was able to trade back here, took a -1 yesterday, but we'll talk about this today. But the main thing I want to talk about is a message that I received, or that I'm looking at right now, from Sapir here. And he goes, does anyone have management ideas or styles when going into market open, right? So first of all, as we get into this, market open, close, none of this really matters, right? The real question here is, when I'm trading a liquid session, what can I now do for the management side? And he goes, this is my US30 trade today, based on a double fractal MB, assuming a reaccumulation model be played out. So to basically break it down for you, in the last few videos, we discussed reaccumulation models. Very simply, a reaccumulation model is what we've seen happen basically on UJ multiple times now, and it happens on all time frames, but that's when you have increasing protected lows until they break down with the expectancy that the next continuation is actually going to be the bullish side. And you have countless examples of these. So I'm just going to show you a few just on this pair alone on 15 minutes to show this. So you had increasing protected lows on the left here. Increasing protected lows, price breaks down, starts going bullish again, right? Increasing protected lows, price breaks down, you expect bullishness, it begins to go bullish again, okay? Increasing protected lows, price breaks down, you expect bullishness, it never breaks up, and it falls off. All good. And that was part of a bigger reaccumulation model, but we don't need to talk about that right now. Increasing protected lows, breaks down, you expect bullishness. Increasing protected lows, it breaks down, you expect bullishness. And here's your bullishness, right? So again, this is a model that you use within an underlying understanding of the higher time frame structure to actually decipher if a market wants to continue trending. And then if you link that up with a few other concepts and link that up with your own confirmation, you create a very nice model or trade plan for you to be able to stay on the correct side of price consistently. So those are reaccumulation models. And to the second point of his question, when he's talking about he entered this trade right here based on a double fractal MB. Now, very simply, a double MB, as I teach in the course, as people that do want to join up will learn, is very simply two SNDs that basically do this followed by each other. And then you're basically buy stopping this high or looking to take the limit off of this. Now, I'm not going to go further into depth on this right now because there's a lot of information on this. I have hundreds of hours, well, tens of hundreds of hours, whatever you want to call it, going through examples and all this fun stuff. But this is the very basic premise of it. And what's interesting about this is that this occurs on all time frames on all markets, but it can also be viewed fractally. What that means is you can view it on a smaller basis. So instead of having to look at something like this and trying to trade that, you can look at it on a much smaller basis. So the way that a fractalized double MB works, as per my private content, is very simply, when price, for instance, is coming down and you look at this high here as its own final down push. So that's looking at this high to this low, something that makes up more than one candle. So this right here acts as its own SND. And when price trades above that high, breaking it, that's what creates an MB1. And simply, as price then trades through the next high, which would be this one, that's creating a fractalized double MB. So that's very simply the overall criteria he's using, where he can then protect the low of both MBs, aka the entire low. He can protect the second low of this one. He can protect the intermediate low that was created just before the break, just of the candle, or you can use your own setting for an actual risk, right? For where you want to place this. Because again, this is something that's more preferential and more personal to your trading, and then you can trade that accordingly, right? And I, in my previous videos, discussed how we were going bullish from these points here on UJ. So nonetheless, that's what that guy means when he talks about a reaccumulation model and his entry criteria, which is a fractalized double MB. Now, of course, you know, that might not give you the explanation you might want on that, but that's not what this video is about. If you want to learn more about that, there's a ton of it in the webinars, the course, and the Section 5 material within the mentorship. But that aside, the main reason I wanted to talk about this is because this is very important and a very important psychological point for a lot of traders. So he basically asks, so that's his system. He's entering his trade. So you can, as a lot of you can see, here's US 30. It's going upwards. Protected lows are increasing. Then there's a breakdown, but he instantly assumes reaccumulation. Unlike many other mentorships or places, instead of seeing this breakdown as a bearish sign, as a change of character, or as whatever else people want to call it, he views this as a bullish scenario because the market is proving bullishness to him. And on top of that, not only are multiple time frames showing bullishness, but if we look at something like the mentfx sentiment outlook, which is available on mentfx.com for free, you can see the intraday continues to be extremely bullish. The daily sentiment continues to be extremely bullish. So there's a very high likelihood that not only with the intraday being bullish, the sentiment being bullish, and the higher time frame being bullish, that the 1 minute is going to be undergoing clear bullishness on any given day. And today, not only that, it's already giving you the protected highs that are increasing and now breaking down. So the odds of reaccumulation become statistically more evident and much more likely. So if you understand that that's what's going on, then of course getting position long is going to give you the best possible outcome for your trades, because you are now taking trades in support of the current underlying money that's in the market. So in this scenario, you can see price pushes up. He starts looking at the SND here, right? And as price pushes back in, he looks to enter it off of that fractalized MB or fractalized double MB. And he said basically this trade is very good, but it went to 30 to 1 afterwards, right? So it made a 1 to 30 risk to reward, 30 to 1, whatever you want to call it, trade after. As you can see, it clearly expanded a lot. Now, this is where a lot of traders really fuck themselves over. This is where a lot of traders get stuck because they now start to attach themselves to the things that could be rather than the things that are. And the truth about it is that you shouldn't be doing that. I mean, that's the easy answer. And you can see I started writing out a response to him. I'm going to finish it right now with you guys, but I want to talk about it in this YouTube video as well. So I basically wrote initially that this is a part of the game. If you found an RR or a management style that works for you, there will always be a trade that goes above and beyond the expectations, right, that you had previously set for the trade, right? And in those moments, those are the exact moments that determine how profitable or consistent you are actually going to be in the long run, right? So in this scenario, if you cannot simply, I'm going to do this on a new line. If you cannot accept the fact that trades you take and manage are sometimes going to lose just before being winners, are going to run thousands of RR multiples or pips beyond where you might have closed, or any other, any other consequent, what do you call it? Or any other way that the trade could have played out, right? Then you're always going to find yourself failing. So this is a really, really important thing to remember, because there's always going to be, no matter what system you use, trades that run way beyond your RRs, some that run not at all, some that you enter and then instantly stop you out, right? This is part of the trading game. If you've done the work prior and you've analyzed how your system's going to look and where you're going to be entering and how you're going to be managing it, then of course, no matter what you do, eventually there's going to be something that blows up, something that moves in such a way that, you look at it and you're like, what the fuck? Like if we look at silver here, I had this beautiful trade here. It secured me about 1.65 RR on my account, so 1.65%. And then Not only that, but it actually went on to run another 18 RR, and potentially, if it keeps going, right, this could become an even crazier RR multiple. Now, if we attach ourselves to playing the what if game, that's the, but what if I held? But how do I figure out a way to hold? What if I can just hold more? What if I can just make more? I could make more. I could buy a Lambo. I could buy a mansion, whatever it might be. Now you are starting to do the things in trading that are not actually going to be profitable. You are now starting to play the gambling game, the casino game, rather than playing the guaranteed EV game, right? So it's very, very important to realize that if you've done the work prior and you have found a system that at the moment makes you money, it doesn't matter whether you take a trade and it instantly loses, or if you take a trade and it goes just to the profit, barely misses it, and then takes you out and makes you have a loss or a break even. It also doesn't matter if it comes, hits your profit, you make your money, and then it goes to the fucking stratosphere years above, light years away. None of those things matter, because the only thing that's happening is that it's playing on your mentality and on your psyche to now make mistakes in the future. Remember, the markets are a game of you versus you. It's not you versus the market makers, you versus the Instagrammers, you versus the influencers, you versus the person with more money than you. It's never been that kind of game. The industry has shaped itself to look like that. People love the drama, people love the competitions, but that's not what trading is. Trading is nothing more than a continuous working of yourself to get better and better than the previous you that existed before. There are no barriers to entry in the trading space. There is no point where you can't get involved anymore. The beautiful thing about trading is you can start it at any point and get very, very good at it, but it's only if you can recognize that it's you versus you. Every mistake that you make, every trade that you lose, every huge mistake that you make, every big account that you blow is just a you problem. It's not anybody else. There's no one to blame but yourself. And the faster you realize that, the faster you will actually find yourself succeeding at the highest of levels, right? So something that's really important about trades and realizing is that, yes, when you have a system, no matter what system that is, there are always, always, always going to be moments where you go, oh, but how? But what the fuck? How could I caught this? Because there are going to be, and I know all of us have experienced this, there are going to be times where you enter a trade, it takes you out, and then maybe makes a big run. There are going to be times that you enter a trade, it goes, it barely misses your take profit and then stops you out. There's going to be trades that you enter and instantly take you out, and you're just there like, fuck, I shouldn't have taken that. How do I do it? I don't want to take it. I need to do this, and I need to change this and that. There are also going to be trades that you take, they run nicely, and then as you take your final profits, they go to 50 RR, right? Silver was a great example of this. I took like this trade and this trade and this trade. So notice this. I took about 1, 2, 3, 4, 5 trades, and with those 5 trades, I made a total of about about 5%, 4.5%, 5% on silver here on the way up. Now, guess what? I could have made 20% plus another 26% plus another 23% plus another 20%, 20, 46. You know, I could have made 80% if I was just a better trader and just went harder and held every single trade to the very, very end. But that's the thing about trading. The system that I've tested for myself, the things that I've tested for myself, the things that I know are going to make me money and at the moment return a positive expected value for me are not holding the 20 RR. Now, yes, there is a system out there and there probably is a management style out there where in the scenarios that I hold the 20 RR, I can still make money. But I haven't tested that system. So there's no point letting go of the things that work for me that will make me money now at the odds of potentially making more randomly, right? Because randomization has never made anyone any money long-term in the markets. That's a very important thing. Short-term, randomization, switching mentors, switching signal providers, randomly all-inning on funding challenges, randomization, right? Randomly getting lucky during COVID, randomly getting lucky on a trade, randomly getting lucky on even something that I might teach you guys here. Randomization can and will reward you in the short term, somewhere, somehow. A random holding of 20 RR, just let it happen, will reward you from time to time in the short run. However, in the long run, you will never guarantee making yourself money because there's no existing edge. the way that you have an existing edge or a consistent way of actually making money and continuing to compound and grow that money is if you've taken the time to create a system, a systemized system, or whatever it might be, right? You have rule-based system to actually approaching the markets and your actual entries and the way you manage, and then following that management, regardless of if trades look like they're about to win, or if they're going to turn around and you just want to close the trade, or if they're making a huge run after, like an example being here, I took my trade, took my partials, got stopped out with my management, but then it made another 16-18% run. That doesn't matter. We're not here to play the what if game. I'm not here to, show you what the Lambos that I'm buying because the trades are going in profit. I'm not here to show you like the little vacations I get to take because that's not what trading is. If you want to learn what trading is, then you need to recognize that trades are going to run without you. So as we're taking a look here, he had a phenomenal trade. And if he's following his rules, and this is the rules that he had for his RR and he was stopped out, then he's done everything correctly. This right here is nothing more than a play on his psyche. Because the reality is if this price instantly turned around and went back down after he made this profit, he'd be like, easy does it, took a beautiful trade, everything made sense, and my rules paid off and I'm happy. But the problem is that in some scenarios, because it's guaranteed to happen, you're going to get moves that do this. And a part of you is going to be like, but how do I catch that? Hey, guys, how do I have the management idea so I can actually catch this, right? And all of a sudden, he may be moving away from the thing that was actually initially profitable for him, right? So as we look at this now, if you cannot accept the fact that your trades you take and manage are sometimes going to lose just before being winners or going to run thousands of RR multiples or pips beyond what you might have closed or any other way that could have played out, then you're always going to find yourself failing, right? So this trade was great, right? So if the rules that you had were followed, then you've done nothing wrong, right? And now we can go into the other side. So in the scenario where you're still testing and building out a system and are actually wondering how can you stay in moves longer, that's where you can take it to the next step. You can ask yourself things like, in what ways could I have managed this that would have allowed me to still take a massive portion of the win on this, right? So one way is, if you notice, if you simply managed with each large move into this market, you would have also been a part of it. So if you waited, right, as this gets hit, you look at the largest last move, you put your stop under the low. Then price makes another big move. You put your stop under the low. Price makes another big move. You put your stop under this low. Price makes a small move, then makes another big move. As it's making that big move and it's a big candle, you put your stop under this low. Makes a big move, you put your stop under this low. Makes a big move. As it's making that big move and it's a big green candle during this candle, you put your stop under that low. And this right here, this price action could be the price action that stops you out. And as a result, you've now still gotten the original RR that you would have gotten, right? Because you have a trail now, right? You might be giving up some because if you're not fully closing here, then price could just return, but that's fine. That might be part of your system. And now you have a trailing based system to take you out of a move because you're aware that you're getting involved with the trend and you've noticed that every time you get involved, there are actually big moves. So there's a twofold thing to this. On one side, if you're already developing a system and you're finding profitability with, let's say, 6RR, 5RR, or a basic management system, just because a trade keeps running does not mean that you need to change the system at hand, because you're already creating what we call positive EV. You're already milking and making money. On the other hand, if you're trying to, so that's the first fold. The second fold, the question is, if you're still developing your system, then we can talk about the actual trailing types that we can use, right? So what I'm going to do now is I'm going to end this video and I'm going to answer this guy and help him out with ideas and understanding of how he can actually manage this through trailing, through MA-based systems, through actual RR, partials, through data collection, and all the other things that come with actually developing a system. But what I wanted to do today is I wanted to jump on with you guys right here and talk to you guys about your rule sets. And just remind you that no matter what you do, there will always be trades that give you the perfect profit and then come back to break even, that give you no profit and then come and lose, right? The thing about our emotions and our psyche and our minds is that we are not going to remember these points, because in these points, our rules saved us and made us money and we were happy. What we are going to remember are these moments here where you get involved, you take your profit, and then it runs another 40 RR. Right? And now our brain is there like, holy shit, how can I make this money? How do I get into this trade? How do I stay in this trade? I want to be able to make that. But you're forgetting that those same rules led to profitability prior. But again, our minds are not going to focus on the small things that it's helped us with, but are going to focus on the big things that it might have not given us. And as a result, when that disconnect happens, because of the way our minds work and the fact that we focus on the things that could have been rather than things that are, well, we start spiraling down the rabbit hole. And as I love to say, we become bunnies. And we start hopping from strategy to strategy, Instagram to Instagram, mentor to mentor. And once again, we start to get bamboozled with the influencer money side rather than the actual trading and educational side. So this is your reminder to stay educated, continue improving, stick to the rules that you are creating, because those are the things that are making you money. And very simply, as you follow those rules, well, that's how you're going to turn profit. And as we look at right here, US 100 plus 1.75 RR here. Now, again, these are all just copy pasted photos from the actual sentiment viewer, which you have access to. So you can jump in and see that. But nice 1.75 RR there. UJ continues to be beautiful. Took a break even at the start of the week here. Now it's kind of just sideways, a little bit of sideways action. So I'm kind of ignoring it right now. But around a 20% or a 15% gain over the last 15 days here, which is absolutely crazy. Silver took a loss this morning. No, last night. Took a loss last night. And then this morning, I was considering a buy here, but I didn't take it because of the overall bearishness on the sentiment. So not seeing it, right? And then prior to that, had a really nice about 5%, 4.5% here. And then EU's just been a non-touch, right? This is one of those markets that's just going back and forth that if you're touching, you're likely taking losses on, and all the other fun stuff. And again, more of this outlook stuff and the discussions happen in the webinars every week. So if you do join up, check out the most recent webinar, being webinar 116, I believe. There you go, guys. Okay, so I'm actually going to jump back in here for 1 second so you guys can have a read over some of the things that this guy can do. Of course, I teach a lot more in the course, but I wrote some of them here for ways in which he can trail. And then what I wrote is that there's something really important that we need to understand. I kind of spoke about this with you guys. There's always going to be trades that run thousands of our R multiples beyond our exit, no matter where our exit is. No matter where you exit on any system you trade, there's always going to be a trade or a market that does something unprecedented. You can either be someone that recognizes that and just keeps following your rules, or you can be someone that starts to gamble. So as I wrote here, and this is what I'm going to leave you guys off with, our minds, because of how we are built, will always be more attached to the things that could have been, rather than the things that are. None of us really recognize, unless we're actively reminding ourselves, how our current rules protect our capital and keep us out of bad losses. But we all have a huge focus on how much of a move we missed in the case that we closed the trade early. Or it might be a normal close, but now because the trade keeps going, we're like, we closed it early. So as a result, we start tying our current lot sizes, our current risk, our current capital to what could have been. For instance, on a $1 million account, that potentially missed 30 RR trade in his mind is tied to, holy shit, I just gave up a potential 200K, 300K gain on my account. But what we're forgetting in that moment is that if we took every trade like that, since we have had no testing and now randomization is at an all-time peak, that 200K plus gain, 300K plus gain on that 30 RR or whatever, would have been nothing more than a one-off casino gamble. There will be endless trades that run more and more and more. And if you compare your lot sizes or your risk or your funded account size, whatever, to that RR missed, you're always going to see, oh my God, all that money was lost. All that money was missed out on. I didn't make my $250,000. How fucking dare they take it away from me? The market makers are after me. This guy's after me. My mentor is not and you start to, once again, not focus on the you versus you mentality of the markets, but you start focusing on the things that could have been, even though you actually have a profitable system. And now, once again, you go down that little shithole, that toilet bowl, that spiral of going through the bunny hopping and all that fun stuff. So it's a reminder today, that's how it is. And look, Sunrock right here, a funded member of ours, right? He quoted this, right? And he said, oh, look, at that 1.63 RR could have been 16 RR. This is literally the silver trade I just shared with you guys, right? I literally shared this with the team, of course, because I share everything with the team. But yeah, this 1.63 RR originally here could have been an 18% gain. If I held this one as well, it would have been a 40% gain. And if I held this one, as you all saw, this one kept going as well, that would have been a 60% gain. But again, one-off casino gambles are not the thing that's making me consistent or making me money. Yes, I could go for those trades on a demo account, all that fun stuff, and start making videos about the Lambos that I'm able to buy and show you these beautiful trades. Look how easy it is. That's not how the game works. If you want to learn how the game works, then it's time to disconnect from all the bullshit online and start focusing on the things that actually work. Data collection and then following your actual rules. And as a result, you're going to grow. And if you're ready to grow, join with the team. And if you don't want to join the team, check out mentfunding. Nonetheless, thank you so much for checking this out, and I'll see you all in the next video.